When you look at the dollar versus the yen, the dollar versus the euro, at what point, or will we even see intervention?
I don't think we're in for intervention anytime soon, Danny. We heard it from Kuroda last Thursday at the meeting of the Bank of Japan. The Bank of Japan is actually quite happy about the weakening of its own currency because it helps it achieve its inflation target of 2%. We're going to be at 1.9%. And to the surprise of many, Kuroda reiterated that he's happy to see the yen weakening here. So I don't think this is going to stop anytime soon. Euro dollar, I mean, I've seen intervention, but that was more than 20 years ago when we were trading at 0.85 against the dollar. So we're very far away from that. And I don't think we're in for intervention anytime soon.
Christian, I find this point you make about Kuroda really interesting, still saying that a weak yen is beneficial because you could say, all right, a weaker currency is good for exporters. But is that even true in this environment, given exporter pain with supply constraints?
Well, that's a fair point. I think they're more concerned really about getting their inflation target of 2%, hitting it. And I think they see it as a once-in-a-lifetime chance. Japan has had chronic disinflation and deflation, and now we're going to be at 1.9%. So they think this is their once-in-a-lifetime chance of hitting the 2% target on their inflation.
Well, we're not going to have you on this program and talk about the yen without at least trying to get a call from you, Christian. Stratogas Chris Ferrone says yen heads to 150 versus the dollar. Could you see it weakening to that extent?
I wouldn't be totally surprised. I mean, we thought actually they would do something last Thursday. We were more keen on shorting Japanese government bonds than shorting the yen. But frankly, we've been wrong. Yeah. I mean, the press conference that Kuroda gave on Thursday basically gave green light for further weakening of the yen. I think this can continue for a while.
Christian, it sounds like there's a dog in the background there that does agree with you, barking. It's agreement. Okay, if we do see 150 on the yen, I mean, these are some unprecedented or near unprecedented levels, Christian. At what point does this volatility in the FX complex break something?
Well, it will have an impact on U.S. financial conditions. So that is something to watch. We just heard it from Maria that financial conditions in the U.S. are tightening. But I think you have to look at that in real terms. So financial conditions are tighter than they were a couple of months ago. But at the same time, we have rising inflation. So real financial conditions in the U.S. are not very tight yet. So I think before that really starts to break something, we need to see further movements in the currencies and also further movements in the rates market in the U.S.
Christian, I know last we talked, you were on your way to D.C. for the IMF spring meeting, and basically you had said that one of your big fears is this global fragmentation we're seeing in the world. Given the IMF spring meetings you have any of your concerns been alleviated?
Not at all. I must say, I've been going to these meetings for 22 years now, and these were the gloomiest meetings I've been to. The buzzword here is friendshoring. That is a buzzword that Janet Yellen, the U.S. Minister of Finance and Secretary of Finance, launched in a speech at the Atlantic Council. So it's no longer about free trade, it's about secure trade. It's no longer about offshoring and globalization. It's about friendshoring. It's about geopolitical bloc building. And that, I think, is a very negative development in the medium term for the global economy. And it's a disentanglement, from China and also from Russia. And I think that left me quite gloomy, I must say, on the medium-term prospects for the world economy.
Well, you get more hints of it over the weekend, right? You have Europe talking about finally getting off Russian oil and gas by the end of the year. Germany says that they can do it by summertime. Christian, just walk me through that scenario in the impact we would have from a Russian oil embargo coming out of the West.
Okay, so what we heard over the weekend is that Germany is giving up its resistance against an oil embargo imposed by the European Union. And the reason for Germany's change of stance is the work that our Minister of Economy, Robert Habeck, has been doing over the last couple of weeks in gaining independence from Russian oil, especially in cooperation with Poland. So, we've brought down that dependency on Russian oil from 35% to around 12%. That is a great job that our government has been doing, and it means that we will not be blackmailed by Russia. Now, we are making further progress on gaining independence on gas. That is much more difficult because we need LNG terminals. We haven't got those yet. Yeah. So I think that we're in probably for an embargo against Russian oil that will take its toll on the European economy. It could also contribute to a further weakening of the euro, but in itself, it will be insufficient to drive Europe into a full-blown recession. If we were to get an embargo on gas, that would change things a lot. Yeah, then we would have to curtail industrial use of gas, to have to shut down plants like BASF in Ludwigshafen, and that would have a severe impact on economic activity in the euro area.
Well, I asked for your yen call. Let me get your euro call. If that is indeed what we see, Christian, how ugly could things get for the euro dollar?
I think there's a good chance we're heading towards parity here. Let's see what we get in the purchasing manager indices later on today. But you see, we've got a broad weakening of the world economy. We just had these terrible PMI numbers out of China. They dropped 2.1%. 2 percentage points on both the national survey and the Caixin survey. The national one is at 47.4, Caixin at 46. These are recession territories for the Chinese economy. Europe is very much dependent on trade with China, on exports to China. Export growth to China is really coming down. So I think there's a good chance we would go towards parity in euro dollar.